From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. The financial markets are coming off a challenging 22, but performed better in the first quarter of 23. So here to discuss how your investments should be positioned for the remainder of 2023 is portfolio manager and chartered financial analyst Travis Dragan. So Travis, where should we get started?
Well, as you mentioned, financial markets did rebound in the first quarter. So the S&P 500 index rose 6%, and the Dow Jones Industrial Average rose nearly 1%. Meanwhile, the bond index rose close to 3%. Now, those returns didn't tell the entire story because markets experienced heightened volatility to the upside and the downside, especially during the bankruptcies that occurred in the banking sector.
And that's right. And in March, several U.S. banks failed. However, quick action from the U.S. Treasury to guarantee deposits and Federal Reserve to provide a bank lending facility limited the damage. But what does this mean for financial markets during the remainder of the year?
Well, we anticipate continued volatility within the banking sector, and we can't necessarily rule out another bank failing. Now, with that said, the circumstances were particularly unique to those small group of institutions and unlikely present the same risks that were present in the 2008 financial crisis. Now, also, with that said, banks are likely to focus their attention to their own corporate health. That means tighter lending standards and less available credit to the broad economy, which may put downward pressure on an already slowing U.S. economy.
Yeah, and for that environment, we've been proactively shifting a higher percentage of the portfolio to higher quality companies with strong balance sheets and more stable earnings to better weather the volatility. And we believe an active portfolio strategy may be able to better take advantage of the opportunities presented later in the year.
Right, so here's an example of how an active financial advisor can add some value to portfolios. So for example, we implemented an energy-specific sector allocation for the majority of 2022. And for the year, the energy sector rose 66% versus a decline of 18% in the S&P 500 index. And looking forward, we anticipate more of these sector-specific opportunities to present themselves potentially before the end of the year.
For investors starting to get nervous about the recent volatility, what steps can they take now to become more comfortable with their investments?
Well, a service we offer is a risk tolerance assessment, which is how much risk an investor is comfortable taking, and then separately an investment risk analysis, which is how much risk the investor is actually taking. So one of the best ways to ride out market volatility is to ensure that investors' risk tolerance matches the risk they're taking in their investments.
And we're also able to stress test a portfolio to find out how much an investor may lose in the event of an economic downturn or a recession. So this has been an eye-opener for people because many times their risk tolerance doesn't match the potential drawdown on their portfolios. If you're concerned about market volatility or would like a complimentary risk analysis of your investments, give us a call. We're always here to help. Stay tuned for Fox News Sunday.